You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We want to chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. Before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender.
Welcome back.
The original DJ himself, Jay Kaplan, is in the house. Welcome.
Well, thank you. It's a pleasure to be here.
He's not spinning any records today, but he may spin a yarn or two. I guess that's is that the terminology, Jay, that they spin a yarn or two? I think that was
That's very old.
Old time term.
But, that would fit us.
There you go. Okay, let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly. 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. National Be Someone Day.
Uh-huh.
Okay, well, you are someone. Why would that? Isn't that every day? I mean, I don't know about that one. I think that one's going to get the gong. I know. A lot of people don't even remember the Gong Show, but that's a whole different story. Get to know your customers day. I guess you're only supposed to do that on the third Thursday of each quarter.
Oh, good.
I don't understand that. I mean, it is what it is. I guess that's all we can say on that one. It is what it is. And having beaten anorexia, today's National Junk Food Day. So now, wasn't it? Josh, wasn't yesterday? Was it yesterday that was National Fast Food Day? Didn't we just had Fast Food Day just recently? So I don't know. I guess junk food and fast food day are a little bit different. No. Sunday, it's coming up. Drive-through day is Sunday. Now, you don't even remember that you're driving through because Sunday is also National Tequila Day. So I'm just going out there with both of those. Let's see what the markets are doing today. The Dow Jones Industrial Average down 16. The S&P 500 is up 19. NASDAQ is up 98. Oil down $2.87 a barrel. What's going on with gasoline? I think that one's probably down a little bit as well. $4.44 is the national average of a gallon of gasoline. $4.46 yesterday. Now, as I shared with you about a week and a half ago, we're heading to $4 a gallon. Not in California. No, we like taxes too much. So we have to add another, about 25% for our taxes here. Oh, sorry, taxes and fees, because we don't trust the state government for taxing. So they call it fees now, so they can get around it. $5.82 is the cost of a gallon of gasoline on average here in the formerly Golden State. $5.82. Josh, you had to go back and get your $5.20. I guess you didn't like the idea of paying $4.17 a gallon. So he's back at $5.20 a gallon. Lori's out here. She's visiting us from Louisiana. They're at $4.02 a gallon, $4.02 a gallon. She came out here to see if it was really true that we're paying $5.81 a gallon. And Jody, $4.75 a gallon. So just taking a look, that's Arizona, Nevada, Florida, and Louisiana, all significantly less than what we're paying right here in California, $5.81 a gallon. That's kind of painful, but it is what it is. We get there's a price to pay for being able to sit here in our studio where we are right now, and it's going to be about 95 degrees today. Or I can drive about 25 minutes south, and it'll be 75 degrees. That'll be right along the coast in Newport Beach and Laguna Beach. Or I can go an hour and a half to Palm Desert, and it'll be 120. Or I can go an hour to Big Bear. So there is a price that we pay for having that kind of flexibility, but we enjoy Southern California. We just don't like having the taxes here. But that's a whole different story. Let's move right along and see what's going on. Speaking of enjoying, so right now, if you're a landlord, if you're a real estate investor, you're probably pretty happy. Annual U.S. single-family rent growth holds steady in May, but remains at a record high. CoreLogic, leading global property information analytics and data-enabled solutions provider, released its latest single-family rent index, which analyzes single-family rent. That makes sense because it's the index. The single-family rent price changes nationally and across major metropolitan areas. Annual U.S. single-family rent growth remained at a record high May 2022, posting a 13.9% increase from May of 2021. Wow. Growth matched April's increase, representing the first time that growth did not accelerate from the previous month. If you want to see a chart, now I've got a chart right here of what the national single-family rent index year over year looks like. And I can actually share that on our social channels later today. It's an amazing looking chart. In fact, I'm going to send this over to Josh right now and see if he can grab a hold of it. I send these things because I just saw the story this morning, and it's amazing. Josh and our team do a tremendous job of getting things covering for the radio show host that doesn't always have these things up first thing in the morning. So they're the ones that make me look good. But take a look at this. I'm looking at this chart. Josh, you're looking at May single-family year-over-year change in Las Vegas, 16.7%. You're in San Diego, it's 16.5%. What else? Los Angeles, Long Beach, 10.9% increase is a year-over-year. So there's some pretty massive changes. And if you look at the chart going back, so yeah, we did see a little bit of a drop in the years that you would expect, right? The rent dropped in 2009, 2010. That made sense, right?
Yes, it did.
But you look at it, and other than that, I used to say it was like the bunny run of a ski slope. Easy for me to say, bunny run. But it used to be the bunny run of a ski slope. It's not that anymore. Take a look at that chart. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a chart of the National Single Family Rent Index year-over-year percentage change, and it also puts on there by tier. So it's single-family residence, low income, middle income, high income, even higher income. So they're all on there, and the charts all follow one right another straight up. So now instead of it being a ski slope, it's more like Niagara Falls, right? If you look at this thing, I mean, you're going straight up. I think I saw just the other day, and I don't do these things. I'm not a roller coaster guy, but over at Magic Mountain, they opened a new roller coaster over there. And I guess you have to go. It's got like a 13-story drop.
Wow.
Can you imagine that? I don't do that kind of stuff.
Me neither.
Even if I've had several martinis, I don't do that kind of stuff.
Even tequila?
Even tequila. There isn't enough of it on the planet. Two things I don't do is roller coasters and karaoke. The roller coasters make me scared, and the karaoke makes everybody else scared. I just throw that out there. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, think home prices are going to fall? Yeah, not really. Nah, that's a joke. And 5 things you should do before you buy a home. How about a reverse mortgage? Are you old enough? Maybe we even have the pre-reverse mortgage. So I'll talk to you about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The S&P 500 now up 15.81. The 10-year Treasury, if I can find it here, my screen just decided that it was going to log me out. So we have to take about 2 seconds here to get logged back in. And we see the 10-year Treasury is down 7 basis points, 296. The 30-year mortgage-backed security, that's up 27 basis points. We like to see those when they go up 27 basis points. And as always, we tell you at this time every morning, OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Locking yesterday. Here's the number. So I share a couple of things with you because I just want you to understand what you hear in the news, and there's many, many ways of getting data. So sometimes the data doesn't all match up. Freddie Mac, they came out with their mortgage market survey. They do it every Thursday morning. And they said that the rates are 5.54, and you had to pay 0.8 of a point to get it. Okay, that makes sense. Now, Freddie Mac does their survey Monday through Wednesday of the current week. They release the data on Thursday. Now, if you're a big lender like Jay, were you ever involved in the survey, Jay, when you were in your heyday?
No.
Okay.
No, they would try to keep me out of those things.
Okay, so they go to lenders all around the country, and they survey them. Now, when they send the survey out, do you think the lender wants to keep that on their desk, or they want to get rid of it? They want to get rid of it. So this is probably Monday data. Could be Monday through Wednesday, but Monday data. Again, they say 5.54. If we go to Optimal Blue, again, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. I can get that out in 2 breaths. I can't get it done in 1 breath. 5.789 yesterday. Jumbos, 5.245.
Wow.
30-year FHA, 5.667. 30-year VA, the best loan on the market for those who earned it, 5.373. And of those of you in the rural areas, 5.601 is the USDA loan. Now, again, that data all comes to us from multiple sources. You could find it if you tried on the super secret website. But why is this happening? Well, the biggie, the bond market turned on a dime this morning after the European Central Bank hiked their Fed funds rate by 50 basis points. Now, they said they were going to do 25 to 50. They have their sources where they let that sneak out. So we did know it was going to be 50 basis points. Now, think about that. 50 basis points gets them back to zero because they went negative, where we're at 1.75 right now on our Fed funds rate. But the market believes that maybe Europe is starting to get serious about inflation as well. That's why we've seen the boost in the bond market, or and whenever the bonds go up, the yield of the interest rates go down. Zillow released their July housing market index showing that they think home values will increase by 7.8% over the next 12 months. This was a revision lower due to slower monthly appreciation numbers and a slower pace of sales, but still very strong. Don't be fooled by the media who will try to skew this as a decrease in home values. Zillow believes we're going to see home price appreciation. Remember, I told you Chapman University for Orange County, California, sees a 12% drop in home values, not just a deceleration, but actually a drop. Initial jobless claims measures individuals filing unemployment benefits for the very first time, increased by 7,000 to 251,000. First-time claims have been above 250,000 since November. 4-week moving average, which gets rid of some of the noise. We're watching. Remember I told you, because even some of our Fed people don't understand this. Recessions come when the unemployment starts to tick up from the very bottom. So they say, well, you can't have a recession when you got 3.5 or 3.6% unemployment. Well, catch a clue. Look at the charts. Every single time we have a recession, it's always led by the unemployment number going up, not going down. So just throw that out there for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make a call, 800-306-1990, 800-306-1990. Our reverse mortgage guru, Jay Kaplan, is in the studio. I used to say in the house, but we're not in a house. We're in the studio right now and talking about reverse mortgages. And yes, Facebook user, we will talk about the reverse purchase. Yeah, I love the reverse purchase. The only bad part about the reverse purchase
Is?
in a very, very hot market, I frequently see that a reverse purchase, we don't usually see it get done in 30 days.
I've done them in 30 days. Now, the lenders, provided you, not those people buying the loans, provided you are working as hard as you can, and the buyers are giving you what you're asking for, you'll find that the lenders and underwriters will always put a purchase first.
Sure, that makes sense.
And, so even in the toughest markets, I mean slowest because they're so busy, even appraisers and underwriters, even appraisers who don't necessarily work for the lenders, put those first. The lenders do the underwriting first. They look at conditions first. So, but the mindset about the reverse is that it takes 6 months, and that's not true. But,
no, not 6 months, but most of the time I look at it and say, to be realistic, we're looking at 45 to 60 days.
I always say 45.
Yeah,
on a purchase.
Now, you can do some things to help yourself there, right? If you've got your counseling all done up front, and you've got your processing work done up front, so that we're not having to collect documents after you've got the contract. Correct. Some of those things will help.
Yeah, well, you've got the 7-day cooling period after the counseling. That's the time on any kind of reverse loan. That's the period at which you should be collecting everything that's needed from a documentation point of view, so that when that 8th day is there, you can order the appraisal, and that should be the only thing left. Not always the case. Depends on the borrowers, but that's what we aim for.
So if I was old enough, could I go and get my counseling today before I even start shopping for the house?
Yes. Okay.
So then does that cooling period start from when I get my counseling or from when I find the property?
That is that is a very good question. One that I've never come across, but I like those kind of questions. Yeah. I can't answer because I learn from them.
Sure.
I can't imagine though that it would be normally from the counseling period, because you don't really know the address yet. So it takes the address to have an official application.
Right.
So in my mind, application and counseling is always done like at one time. To separate them the way you just said, I haven't seen, and it's good. I'll find out.
Yeah, we love trying to love posing questions to the guru. Everyone, I think
you can't become a guru unless you're asked questions. You can't
have an amazing day, you as well. I don't know who it is, but have a great day. Hey, if you want to, so we can say hello to you at least, go to StreamYard.com/Facebook, and they'll actually let you tell it that you can identify yourself. So, but we appreciate comments. Anytime you have comments or questions, especially about this reverse mortgage, it is a very well misunderstood or highly misunderstood product.
But I'll get that answer to you by tomorrow or so. You don't have to wait for me to come back.
Okay, so we'll put that we'll put that on the comments for the show. But the bottom line is Facebook user, yeah, it's a good idea to get a reverse. If you're old enough, get that reverse purchase and contemplate. A lot of people don't realize that you can do a reverse purchase.
No, I know.
You got this misconception. I have to have my.
You haven't always been able to. So
okay,
that's one of the newer. I mean, not the last couple of years, but it's one of the newer products.
Now, if you're young enough, and you don't want, if you're not of age.
But remember, you can be 55 on many of the proprietary loans.
Okay, so 55, that one's a good one. So there's a product that we used many, many years ago, and it was called an accelerator loan. And it was it was basically a first position HELOC. So you could take money in and out of it. And it did a lot of the same things that the reverse mortgage does. Doesn't have the insurance component of it. And it has a higher loan to value. But if you're working toward, we just had somebody the other day that didn't have enough equity to get a reverse. And we said, well, we got this accelerator. That might be their solution to bridge them into a reverse mortgage to get that equity position up.
There is a loan out there that one of the major lenders have that kind of fits that bill. It's like it automatically turns into a reverse mortgage 10 years after you get it.
Well, that's cool.
And it's called an equity avail. I guess avail is for availability. And it's a little more complicated, but everything's gone through slowly so that you understand everything. You're going to cut your payment down probably by half. So there'll be some negative in there. Okay. But regardless of what the values are going to be 10 years down the line, it automatically converts to a reverse mortgage as long as you're there and you want it. And then you have no payments whatsoever. So it gives you a period of time that when you can't really qualify for a reverse mortgage because you don't have let's use forward language like excuse me, loan to value.
Okay.
Principal limit is the real word, but okay, you don't have the loan to value or the amount of equity right now. You can still lower your payment quite a bit and be in line for an automatic reverse mortgage when the time goes by.
It's nice to see that they're coming out with more varied products in the reverse world.
Mm-hmm.
It used to be you just had basically the FHA reverse mortgage, which was far better than the programs that were in the 80s that people still think are existing, that they don't. They were in the last century. They're gone. They haven't been here for 40 years, but amazing how, I guess maybe it's because they were so bad, people still remember them. And then
they told their kids and their kids told their kids. And it's too bad.
That's right. All. Because the program is a great program once you understand it. And we're going to understand it better when we come back and talk more with Jay Kaplan. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. 5 things you should do before you buy a home. The thing, home prices are going to fall. Think again. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. It's a great, great tool. If you look, not just because I'm the one that's giving it away for free, but it is a great tool. If you go on there, the first tab on there, you actually can shop for homes in about 97% of the country, direct MLS feeds all over the country. So you can put in your parameters and it'll tell you. Now you go to a local realtor, they are great. I am a big fan of using professional guidance, but your local realtor probably can't tell you what's available in Coeur d'Alene, Idaho right now, right? You can do that on rsrhomescout.com. Fourth button over gives you 4 different values for your property. I know it's one property, but each one of the services give you something a little bit different. There's 4 of them right there. Think home prices are going to fall. Think again. Over the last 2 years, the rate of home prices appreciated at a dramatic pace. While that led to incredible equity gains for homeowners, it's also caused some buyers to wonder if home prices will fall. Important to know, the housing market is not a bubble about to burst, and home price growth is supported by strong market fundamentals. To understand why price declines are unlikely, it's important to explore what caused home prices to rise so much recently and where experts say home prices are headed. Here's what you need to know. Home prices rose significantly in recent years. If you're watching us on RonSiegelRadio.tv, the ABC News and Talk AM 1490 video feed, or any of our socials, you're seeing a chart right now. That's the latest data from CoreLogic to illustrate the rise in home prices over the past year and a half. Gray bars on the chart represent the dramatic increase in the rate of home price appreciation in 2021. Blue bars show prices are still rising in 2022, but not as quickly. You can look all the way January 2021, 10%, June of 2021, 17.2%, December 18.5%, April of the current year, 20.9%. Oh, wow, May we dropped to 20.2%. Now, just remember, if you put 10% down, that means you got a 200% appreciation on your capital. Just throw that for context. You might be asking, why did home prices climb so much last year? It's because there were more buyers and there were homes for sale. That imbalance put upward pressure on home prices because demand was extremely high and supply was record low. What experts say prices will go from here? While housing inventory is increasing and buyer demand is softening today, there's still a shortage of homes available for sale. That's why the market is seeing ongoing price appreciation. Mark Fleming, chief economist at First American, explains it like this, quote, "We're still well below normal levels of inventory. That's why even with the pullback in demand, we still see home prices appreciating. While there is more inventory, it's still not enough. As a result, experts are projecting a more moderate rate of home price appreciation this year, which means home prices will continue rising, but at a slower pace. That does not mean prices are going to fall. As Selma Hebb, deputy chief economist at CoreLogic, says, quote, the current home price growth rate is unsustainable, and higher mortgage rates coupled with more inventory will lead to slower home price growth, but unlikely declines in home prices, unquote. That one scares me because they've been so wrong on everything when it comes to home price forecasting. That one's a little scary. In other words, even with higher mortgage rates, moderating buyer demand, and more homes for sale, experts say home price appreciation will slow, but prices will not decline. If you're planning to buy a home, that means you should not wait for home prices to drop to make your purchase. Instead, buying today means you can get ahead of future price increases and benefit from the rise in prices in the form of home equity. Bottom line, home prices skyrocketed in recent years because there was more demand than supply. As the market shifts, experts are not forecasting a drop in prices, just a slowdown in the rate of price growth. To understand what's happening with home prices in our area, give me a call. And as always, I ask, if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, Can I count on you for that introduction? That is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continue our conversation. Jay Kaplan is with us. He is the reverse mortgage guru. So even without us planning it on the last segment, Jay and I generally don't even have any plan on what we're talking about other than reverse mortgages.
Yeah, but I mean, that makes for a better conversation.
And it's great when
More
you,
friendly, and so the people should feel
exactly
more friendly also.
And it was great in the last segment we spoke about reverse for purchase because we had Mr. or Mrs. unknown Facebook user ask us that or make that comment, a reverse purchase to buy as well. So we talk about that a little bit. So that can be done. It's a easy to do.
Yes,
It's no different than doing any other reverse mortgage.
correct. You need a fairly large down payment. Usually older people are going to have that because
They're not first-time home buyers.
no, they're not. And they, if they haven't used their house as a credit card, some people have.
Sure.
Usually there's a lot of money that will come out of the sale of one. And even at these higher prices, that should cover, at
So,
least
Jay,
the amount of the down payment, roughly 50%.
let's throw some numbers here, Jay, just because, you and I go off on tangents all the time. So it's fun for us to go off on these tangents. So let's throw some numbers because the last time I looked, and I'm going to do it right this minute while we're on air. I'm not going to throw a curveball at Josh. We're not going to show it to you. I'm just going to tell it to you that we have a real estate report card, and it kind of gives me the information for every zip code, every county in the United States, and it tells us about property values or statistics on these properties. And I looked at this one right now, real time. Data comes from Black Knight, if you want to know where we get our data. So this comes from Black Knight, huge company.
Yeah.
Median home price in Orange County, California is $1,016,000. And I'm going to leave off the 097 at the end.
Okay.
But to make life easy, I'm just going to say $1 million. So you got $1 million house here in Orange County. A lot of seniors have had those houses for a long time, may have bought it at $15,000, $20,000, $30,000. We know of some of those. I know a property right now that's in Old Town Orange, was built in the 40s, has it's up for sale right now, I think $1.6 million, and it's free and clear. But means there's no mortgage on it. But I'm just going to say, had that property been $1 million property and it had no mortgage.
Correct.
So now when I sell it, let's assume there's no cost to sell. I just got a check or a wire transfer to my bank for $1 million from escrow.
Sounds good to me.
I like that.
Yeah.
Right. I didn't have to play the lottery to get it. Well, because when I play the lottery, I lose. So this way, I actually get some money. Hypothetically, I have as much chance of getting this $1 million as I do winning the lottery.
But it's
got to play it to win it. So I got $1 million now, and I want to go out to Palm Desert or La Quinta, and I find a house, nice house, because out there property values are a little bit lower than they are in Orange County, California. If I put in Palm Desert, California, I'm going to look up a median price in Palm Desert, California. I'm going to see what the median home price is there.
Good, I bet.
Yeah, it's still probably a good number, but it's lower than we are here. Riverside, Palm Desert area says $552,000. I'm going to go the other way. I'm going to say, well, something, my wife likes nice things. She found a property for $600,000.
She likes nice things. Why'd she marry you?
Okay. We got a funny guy. Josh, we need to mute his mic. Okay, so we found a property out there for $600,000.
Okay.
Assuming that I am of age for a reverse mortgage, the FHA reverse. Got $1 million. Do I have to pay cash for this?
No, not at all. And you don't want to, because you always want a cushion of cash or liquid assets, whatever.
I got money to live on that way.
Yeah. I mean, you could now I'm going to just give you roughly rule of thumb. Okay. Because we have to know a lot more about you, your age, the age of your wife or the youngest person. Things like that.
She's older,
but
she's not listening, so I can say that.
Okay. Let's just say roughly you're going to put 50% down on that to make that happen.
So I can sell my house here. I get a new house for putting $300,000 down, and I have 700,000 still in my pocket or in my bank account. And on the 300,000, what's my payment there?
Zero.
Zero.
Well, the payment that you are obligated.
No
to
obligated
pay
payment. No
is
mandatory
zero.
minimum payment.
Correct.
So I can live the rest of my days out there and have no payment for the rest of my life.
Right. And let's assume what you're selling here and going there because you like the lifestyle there. Maybe you like golf. Maybe you like other things. Maybe you like the climate, or the fact that you're probably getting a bigger house for a lot less money. And
Sure.
now you've increased your bank account by quite a bit just by making that change.
So from my old days as a financial advisor, and I'm not giving anybody financial advice. That's not what we do here. But I'm going to go to my old days as a financial advisor. If I can bring this up real quick, because I'm sure Josh is getting ready to tell me that we got to go to break, but I'm going to try and get this in. So I've got $700,000, and the rule of thumb is that if you take 4% if you don't spend any more than 4% of your money, you'll never run out of money. That's a rule of thumb, because your money should be working for you in some way, and you should be able to get more than 4%. So basically what we're saying right there is I can take $2,300 a month in addition to whatever my retirement, my pension, my Social Security, everything else I have. I can take $2,300 a month there and not run out of that $700,000.
Right. And there's one more level there that I'm not sure you want to go into, but
Well, you know something?
Right.
We're going to have to hold that to the next segment.
It's held.
It's held. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, one more level with Jay Kaplan. We're going to talk about that and 5 things you should do before you buy a home. I'm going to give you a 6th. Josh will throw it up on the screen. Get the home buyer's guide, rsrhbg.com, rsrhbg.com. So that's actually a 6th thing, but I'll give you 5 things you should do before you buy a home. You can reach me anytime, off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you.
There you go.
But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas, increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national
but I
expert
just thought
Ron
I'd
Siegel.
where I was at.
Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. 5 things you should do before you buy a home. 5 things plus 1. Buying a home can be a stressful and confusing time for many home buyers, but it does not have to be. I'm going to share 5 simple things plus 1 you should do before you buy a home. One of the first things you should do when you're considering buying a home, know your credit score. Tip number 1, get your credit report and scores for free. I'm going to also say maybe you want to pay for it. myfico.com. To get a home loan, there are several factors that come into play, but your FICO or credit score is the most important. You can check your credit report and get your scores online for free. The Fair Credit Reporting Act requires each of the nationwide credit reporting companies, Equifax, Experian, and TransUnion, to provide you with a free copy of your credit report at your request once every 12 months. Once you have your credit report, be sure to review it and check for any errors. Tip number 2, Look for errors on your credit report. Mistakes on credit reports are bigger issues than you may realize. If you do find inaccuracies, and you will if you know what you're looking for. I have never, ever seen a credit report that's completely accurate. I helped somebody with my first loan, their first loan, in 1983. So it goes back a few days. They have 30 days to investigate your dispute. If they find that the item in question is inaccurate, they will correct it. They must correct it. Nothing has to be on your credit report, but everything that is on your credit report must be complete, accurate, and verifiable. Tip number 3, improve your score before applying. A few points difference in your credit score can be the difference in whether you qualify for a home loan or not. There are a few things you can do to increase your scores. First, pay down the balances on your credit cards. Your credit utilization ratio is your credit limit divided by your card balance. The ratio accounts for 30% of your overall credit score. Only payment history has a bigger impact. For example, if your credit limit is $10,000, you have a balance of $6,000, your utilization is 60%, which is remarkably high. The lower your credit card balances are, the higher your credit rating will be. Some credit experts advise keeping your balances below 20% of your card limit. The next thing you can do to make all of your payments on time, 35% of your score, is based on your payment history, so it's important to pay all your bills on time. If you're a forgetful person, you can set up auto pay with your creditors so you never miss a payment. If you're wanting to buy a home, do not apply for or open any new credit. This means to hold off on buying the new car, motorhome, opening a new credit card. Do that stuff after the mortgage. Tip number 4, check your savings. You need a certain amount of cash in the bank to buy a home. If you're living paycheck to paycheck, then it probably is not the ideal time for you to apply for a loan. There are more upfront costs associated with getting a mortgage loan besides the down payment. There are closing fees that you will need to pay the appraiser, lender, and title company. So you need to make sure you have enough cash on hand when you're ready to close. And one of the most important things you should do before you go out looking for a home is to get pre-approved, or in our case, pre-underwritten. Tip number 5, get pre-approved. A pre-approval means you have completed a mortgage application and a mortgage lender has checked credit and verified income and assets. You'll need to submit documentation verifying your income, assets, and savings, and your lender will be able to help you through this process. Most sellers today will not even consider an offer from a buyer who has not already been pre-approved or pre-underwritten, so plan on meeting your mortgage lender before you go shopping. A lot of that can be done electronically now, so you don't even have to provide the bank statements, tax returns, pay stubs. There are certain things that are all electronic, so it makes it real easy. Buying a home is exciting. There are a few simple things you can do before you start looking that will help in the process. Thanks for that, listening to that little segment there for you. Again, if you know anybody looking to buy, sell, or borrow on real estate, ask them to give me a call. Can I count on you? And as don't forget again the home buyer's guide, rsrhbg.com, rsrhbg.com. That is the Borrow Smart segment brought to you by the Financial Institute of whatever it is. National Institute of Financial Education. I guess I should know who the sponsors are. Right? Borrow Smart, the National Institute of Financial Education. I didn't say it before we started, so Josh didn't have my cue cards up there for the old guy that doesn't remember. So he's covered my bacon now at least twice today. I don't know how many more times that I haven't watched. Borrow Smart segment brought to you by the National Institute of Financial Education. Continue our conversation with Jay Kaplan. He is the reverse mortgage guru. And before I cut him off to go to break, he was going one more level on our purchase, reverse for purchase. We better make sure we put this, being that our Facebook user got us involved in this.
Yeah, hello.
We better make sure we put in our show notes. We talked about reverse for purchase today.
Yeah, and just real quick, everything you talked about with credit is absolutely true and absolutely important when it comes to most loans, but not with reverse. With reverse loans, we're only looking to make sure that you, the borrower or buyer, have enough money to cover your taxes and your insurance and the maintenance on your home, figured at 14 cents a square foot, but whatever that is.
You don't need to worry about that part. That's technical stuff.
Yeah, but
know that it's there. That's the important part.
So,
it's there.
But the credit scores, no, that doesn't matter. It's how you pay your taxes, your property taxes, your home insurance, and your regular payments if you'd had them before. Those are the only things that do matter. And to that extent, when it comes to qualifying, almost never have to use anything like W-2s, stubs, anything like that. It's just simply nothing more than your Social Security. And in some cases, not even that, because we allow the amount that you keep or what you have in the bank, divide that by the number of months expected to live, and that's income.
So let's talk about that, Jay, because right now, many people have renamed their 401k to a 201k because it's been cut in half with what the market's doing. And if you've got that reverse mortgage, you can actually, if you've already had it, you can live off of that.
Yeah, I mean, right now, you think of yourself, if you have a reverse mortgage, as lucky if you have a line of credit, because that line of credit is growing based not on property values at all, on interest rates. So you are, I hate to use the word earning, but let me just say your line of credit, the amount available to you is growing very fast.
We refer to it in our Borrow Smart world as the effective percentage rate.
Ooh.
Right? Because it's not what you're earning,
Right.
but being that you're not spending it,
right,
it really becomes what your effective rate really
right.
is.
And you know, if you do have investments, and you were talking about that 4% rule, and there is a bad year, I guess when that is, you don't have to take out or sell more of your equities.
Right.
You leave them where they're, because you know they're coming back. They always come back.
Sure.
But if you sell them, they're not coming back, and they'll never be there again to help you make more money. So on those very few years, probably, you take money from your line of credit in lieu of selling equities, and then you just stay on the same course.
Now, I'm not giving you financial advice, legal advice, or tax advice.
Just saying what's possible.
But here's the issue. If you call most of the advisors and you say to them, should I take money out of my property, most financial advisors, to pay my household bills, they're going to tell you no, because that's what the regulators tell them they have to say. I'm not a licensee any longer. I had my Series 7 and 66 and insurance and I had all those licenses at one time. I'd rather be honest with you. Not that the other people are dishonest. It's just that they have to follow different sets of rules. So I would say to you, at a time like this, borrow the money or take some of your equity. You're not really borrowing. You're taking some of your own equity and using that. They're allowed to tell you about replacement assets. So what we're doing is we're saying when the markets are down, borrow smart, right? Take some of the money out of your reverse mortgage to live off of.
I mean, after all, you're borrowing money from a growing asset.
Sure.
Once in a while they go down, but overall, that's a growing asset. Whereas if you take your money out from redo your car loan or this or anything else, that's a decreasing asset. You want to take it out of your home.
Let's do a real quick, another real quick analysis. So in the last segment, we talked about buying this $300,000 house with the $300,000. We're taking out a $300,000 advance on our reverse mortgage, using it. Obviously, we want to do, if we can, we want to do that with an adjustable mortgage line of credit. We can explain that a different day. I don't have time to right now. But let's just look at our property that I told you about out in La Quinta or Palm Desert. And the appreciation there is 5.02% over the last 63 years. Will it go up that much again? I don't know. But I can tell you a 63-year history is a pretty good amount of history.
Yes, it is. It's not even as old as I am.
It's older than me. So that means the property's going up, let's call it 5%. The property value is appreciating at $30,000 a year. Now, I don't know, Jay, where are we at right now on, could I get a 6% loan on my reverse mortgage?
Oh, yeah.
Oh, can I get 5%?
Yeah, it'd be in the fives.
In the five.
Lower fives,
so let's say 5%, just for fun. If you want to add a percent, you can do that math on your own. So 5% of that 300,000 now means that's your balance on your lien is going to go up by 15,000. Now, my quick math right here is we appreciated at 30. Our lien went up by 15. That means that our net worth went up by $15,000. So those people that think that, oh, I don't want to get a reverse mortgage because I don't want to use up all of my kids' equity.
No, their equity is growing
or their
faster.
legacy.
Yeah, and even if you are taking more money out, that 5% you've got going in the Palm Springs area,
Right.
it's going to cover, because like you had said, it's an adjustable loan and it's going to be probably lower than that most of the time.
Yeah. So the bottom line is your legacy is growing. You're not having to take cash away, because if you were buying a house, you'd have to take cash away. And that $700,000 that we did put into some investment, I know a lot of great investment advisors that could get you potentially 8% return. So that's getting you another $42,000 a year.
Yeah, and some of them have safety measures at the bottom that
Right.
you can't lose more than X amount. So you've got, and we're not supposed to give this as advice, but a lot of people are on an arbitrage train there.
Well, yeah. And so the bottom line here is, again, we're not giving financial advice. We're giving you some education. These are the questions you want to ask your financial advisor. If you ask them the question, they're allowed to answer it. If you don't ask them, they can't offer it.
Okay.
I offer it.
On that other level thing, and I'll try to be as fast as possible.
Yeah, because Josh already gave me the wrap up.
Oh, okay. You can add more to your down payment, and it will be part of your line of credit.
So you can put more money in, and you get the money right back out. So just more good stuff, more benefits to you,
more choices,
more options. If you want more information on this, if you want to talk about it, give me a call, 800-306-1990, 800-306-1990. Happy to put you in touch with the guru, Jay Kaplan, and get you all the information that you need so that you and your family, your heirs, are comfortable with the entire process. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
To call him something, I think I'll